Yes, it is delicious. Physicist, baker, lover, what can't I do?
Well, clearly mental tasks are not enough. Maybe you need to challenge your motor skills.
For the last time, I am not having a tickle fight with you. What a real challenge. Try keeping me from eating more of these.
Okay. Session 15. Okay. So this is where we're at. So we're dealing with segment reporting. And once a company is listed on a stock exchange or intend to apply for listing, then it is required to prepare a segment report under IFRS 8. Now, what is important to understand for a segment report is that we're getting information, the public is getting information that the chief operating decision maker is getting to allocate resources within the organization. So however, that information that he or she receives to allocate resources and how they define it is the same information that the public is going to get. Now, the chief operating decision maker could be the CEO, could be the president, or it could be a committee that is responsible for allocating resources. So it can be a committee or it can be an individual, right? And however they allocate resources, that's how we're going to define the segments within the organization. Why are segments important? Now, if you think in terms of Grace, remember we're talking about Grace Kennedy, and we're saying which industry it is operated in. Of course, Grace is in banking, it's in agriculture, it's in manufacturing, distribution, so it's in several different. So we have different companies. When we look at Grace financial statement, what we just see a profit or loss for the entire group. But if we are to get a better understanding of it, we need to see the breakdown in terms of its various segments. So a segment report provides users with a better understanding of the financial statements. What are users able to do? Let's say if we're operating a group of entities, right? A group of companies. And one of those entities is operating a hotel, so it's in the hospital industry. We know now, in terms of 2020, if it's producing financial statements after, revenue is supposed to go down as a result. So we're able to assess the risk and reward because tourism is basically dead as it is now for a time period. So we're able to assess the risk and rewards. Or if it is in agriculture, we know that Jamaica is in a region where it is subject to hurricanes in summer. So we can better able to assess the risks and rewards. We're able to assess the impact of material changes of a segment on the company. So if there's a particular segment, as in this case, the hospitality industry, it is it. Restaurants are it, heavily too. Or if it is operating a cinema or a nightclub, there's a material impact as a result. We are in a better position to understand the current profitability of the company because we can see the breakdown of which company is making a profit and how much profit is contributing. And if a company is making a loss or a segment is making a loss, how much is that particular segment contributing? And since we can break it down by segments, we can therefore better assess and predict the future profitability and financial position of the entity as a result. Okay. Now, in this example, the group is organized into 3 segments: the banana segment, fresh food segment, and the processed food segment. Ainsley, are you still with us?
Yes, sir, I'm listening.
Can you read the various segments of it?
Okay, the group is organized into 3 segments. Banana segment, this comprises the growing, sourcing, ripening, marketing, and distribution of bananas. Fresh food segment, this comprises sourcing, marketing, and distribution of fresh produce, other than banana. The processed food segment, this comprises the production and marketing of fresh juices and drinks.
Thank you, Ainsley. You know of any company that is involved in terms of banana production and fresh fruit, in terms of marketing it, local and overseas?
JP.
Jamaica Producers Group. They're involved in that. Now, as it is now, what is important for us to know, remember, in the group, the entities, they can trade with each other. What we want to know is what is sell externally outside of the group. So what we identify is external revenue. Or we can flip this another way. We can have external revenue plus inter-segment revenue, and that will give us total revenue, whichever way we want to do it. But it is important for us to disclose in the segment report for each segment what revenue is made. So you notice we have the banana segment, fresh fruit, processed food segment. So for banana, the external revenue is actually 32,247,000. And we have the fresh fruit, which gives us 14.8 million. And the processed food, which gives us 13,865. And then we have the total, which is approximately 70 million in terms of external revenue. So each segment, the revenue is defined. The revenue is defined. Okay. Now, what profit or loss did the banana segment make? You can see that it made a segment, a profit of
3,868.
68. Okay. And for the other segment, it made a profit of 3,800, where 3,800,000. And of course, one segment, this segment is making a loss. One minute, my screen just froze. Let me just go back. Okay. So for some expenses, it's difficult for you to allocate to a particular entity. If it's advertising for the entire group, then it is difficult to allocate that. So there are unallocated expenses that dispose of land and buildings, and they got some money, and they have made some people redundant. So we can see what is the profit after tax and what is the taxation that is made. But by having the segment report, we know which entity made a profit, which segment made a profit and which made a loss, and how much profit or loss they contributed to that. So if we didn't have the processed food segment, you realize that the profit would have been greater because that segment made a loss. So we're able to assess the risk and rewards as a result of this segment reporting. Okay? So we're at 12:31. I think we can take a 5 minutes break. So resume at 12:36.
Okay, sir.
Okay. And I hope you play around with Zoom. You can always change your background and get a different background. And the background will appear anytime you go on.
Sir, I think we're ready now.
You ready? Okay. So before you ask God for what you want, first thank God for what you have. So we're going to look at interim report preparation. Now, when entities are listed on the stock exchange, they're required to prepare, like Jamaica Stock Exchange, for example, they're required to prepare an interim report. With the Jamaica Stock Exchange, it's every quarter they're required to prepare. In some jurisdictions, it's every 6 months they prepare. But many of the jurisdictions, it's every quarter that they prepare the interim report or quarterly report. Now, if you know how to prepare an income statement, a balance sheet, a statement of cash flow, you already know to prepare an interim report because this is just a mini version of it. So it doesn't show all that detail. So what we have is interim financial statements. And they're similar to an annual report, except that detail is excluded in terms of all those notes. There are just a few notes that we're talking about. And whereas the annual report, we have the audited financial statement. Majority of jurisdictions, they don't require the interim report to be audited. So entities don't waste their money and go and audit. So it's usually not audited, okay? But we have much less information. So as I indicated, once a company is listed on a stock exchange, it is required to prepare and publish the interim report. And you should have seen some of these interim reports if you have looked in the newspaper, even the Sunday newspaper, you'd have seen an interim report being published. Or if you go on the Jamaica Stock Exchange website, you can check the interim report. Of course, the board of directors have to approve the interim report, and 2 directors usually sign. So the chairman usually signs and another director. Remember, in terms of your annual report, if you have changed the name of the chairperson to your name, therefore means you have to sign and one of the other directors that need to sign. Yeah. So it's usually approved by the board and signed by at least two directors. Now, what should it contain? Of course, the name of the company and the period of the report, or if it's a group of entities, the name of the group and the period of the report. So it could be for the first quarter that we're talking about. And if the financial year begins on March, let's say April 1, the financial year begins on April 1. Alexia, can you tell me the first quarter, what period are we going to cover? If we're preparing quarterly interim reports, so the financial year begins on April 1. Just like the government, financial year begins on April 1. Alexa, are you here?
Yes, sir. What are you asking?
For the first quarter, which months are we looking at for the first quarter?
If the financial year started in April?
Yes.
So April to July?
Go again. Quarter. Go
I
again.
will January to April then. I'm not sure, sir.
No, you're
Sir,
sure.
can help her?
Who is that?
Cameron, sir.
Okay, go ahead.
April to June.
So remember I say use your fingers, you know. April is 1 month, May 1 month,
And
June
then
another
June.
month, right?
Yes, sir.
Yeah. Let's say the financial year begins on January 1. The first quarter would be what? Anyone?
So April to July?
The first quarter is Shasheen?
It would be January to March.
January to March. Thank you very much. Eh? And I see somebody raised the hand a while ago. You know how to raise the hand. Okay. So it will be January to March. So it depends on when the financial year begins. That will tell us the first quarter, and we know the second quarter and third quarter. Okay? the report needs to indicate whether the report is audited or unaudited. As I indicated, it's usually stating that it's unaudited because there's no requirement for it to be audited. We're going to have a condensed statement of comprehensive income, the income statement. And of course, if there are different segments in the organization, a segment report will be included. A condensed statement of financial position, which is the same thing as balance sheet. A condensed statement of cash flows, and a statement of changes in equity. So it's the same thing that we're doing, but in a condensed format. A note indicating that the accounting policies were consistent. So we have to indicate that the accounting policies are consistent. Remember, the accounting policy is supposed to be consistent from one accounting period to the next. Or if there are any changes, what are the effects of those changes? And if there's anything that happened during a particular quarter that will materially impact the financial statements and the outcome, then we need to let the users of the financial statement know about that. So somebody looking at the financial statements for January to March for hotel, we need to let them know what happened during this particular period so they understand why the profit went down and the revenue went down compared to the corresponding period quarter last year. So any material information that occurred during the particular accounting period that will give them a better understanding, then we need to provide the user financial statement with that information, okay? I hope you have read the question already, right? So from the information provided, prepare the considered interim report income statement for B Limited for the 9 months ended September the 30th, 2019. And B Limited owns 8,000 ordinary shares in Win Limited. Now, it says B Limited owns 8,000 ordinary shares in Win and 10,000 ordinary shares in KISS. And the directors of B Limited paid an interim dividend of 80 cents for the quarter, 70 cents for the corresponding quarter, which was 2018, okay? Now, it says B Limited owns 8,000 ordinary shares in Win and 10,000 ordinary shares in KISS. So 8,000 over 10,000 and 10,000 over 40,000 for KISS. That will tell us which entity is a subsidiary and which entity is what?
An
associate, right? So B Limited would be the parent for Win because we're talking about 8,000 over the 10,000, right? Which gives us 80%. And for KISS, it's 10,000 over the 40,000, which gives us 25%. So we know KISS is an associate and Win is a subsidiary. It therefore means when we want to get the total turnover, there are two entities in the group. So it's only two we added, remember. B and the subsidiary, which is Win. So we're adding 800,000 to 600,000 to get the turnover for the group, which is 1,400,000. And for the operating profit, that is the profit before tax, we adding the parent entity, which is 470,000, and Win, which is the subsidiary, which is 350,000. How do we get the taxation figure for the group? Anyone? Are we all down to speed?
At the parent and the subsidiary?
At the parent and the subsidiary. That's 140 and the 120. And what are we going to take when we're preparing the financial statements in terms of the associate? How are we going to calculate? What are we going to calculate in terms of its profit? Remember, it's 10,000 over 40,000, which gives us what? A quarter.
So it would be 25%.
Yes, it's 25%. We're talking
So
about
we take 25% of their profit.
for tax, which is 290,000. The 290,000 times the 25%. So that's the profit that we're getting from them. Okay? Now, in terms of the group taxation, as you said before, it's the 140 plus the 120. That gives us 260,000. But for the associate tax, it's 25% of the 90,000, which gives us 22,500. So we say B is the parent and WIN is the subsidiary. Since WIN is the subsidiary and we own 80% of that, it therefore means the minority shareholders or the non-controlling interest will own 20%. How much profit are they entitled to? The non-controlling interest.
20%.
20% of what?
20% of the 230.
20% of the 230,000, which gives us 46,000. Okay? And we'll come back to the earnings per share calculation. So we're saying that there are two entities in the group, B and WIN. So we add their revenue together, the 800 and 600 to get total revenue. To get operating profit, we add the profit before tax of both of them. Okay? And when we want the taxation figure, we're talking about the tax for the group, which is 140,000 plus 120. And then we find the associate tax and we add that to get the total tax. Okay? And then we take the profit for the associate, which is 25%. And we're saying we're going to subtract any profit that belongs to the non-controlling interest, which we calculated to be, where did we calculate it again? Okay, 46,000, okay? So this represents now the unaudited group results for the 9 months ended September 30th, 2019. So we added the turnover to get the total turnover for the group, the operating profit, a share of the results of the associate, that's their profit before tax, the 25%, and that gives us the total profit before taxation. From that, we're subtracting, so it is from this 892,500, we're subtracting the taxation, which is 260 for the group, 222,500 for the associate, and this gives us profit after taxation of 610,000. But all this profit doesn't belong to the group because the parent entity isn't controlled 100%. So we have to take out the profit that belongs to the non-controlled interest, which is 46,000. So the profit attributable to the group is 564,000. Now I'm just going to go back. So it's 564,000. You can see B is the parent entity and the number of ordinary shares it issued is 100,000. So it issued 100,000. And the profit for the group is 564,000. So we can go back now to the calculation of the earnings per share. It is that 564,000 divided by the 100,000 ordinary stocks, and that gives us the $5.64 for the earnings per stock unit. Are there any questions?
No, sir.
So it's the same principle we're applying. If there are two entities in the group, we add their revenue together. And if the parent doesn't own 100% of the subsidiary, whatever profit, after-tax profit belongs to the non-controlling interest, we take that out. And if there's an associate, if we own 25% or whatever percentage we own, let's say we own 30%, we take 30% of the profit before tax and we take 30% taxation. In this case, it was 25%, so we'll take 25%. Okay. So we said before you ask God for what you want, first thank God for what you have. Any questions? No. No. Trying to find. We can take our 5 minutes break, yeah?
Okay, sir.
Third time.
Time? Okay, we're ready again. Thank you. So minds are like parachutes. They only function when open. So we have to open our minds. Now, we're going to be looking at, in this case, hospitality accounting. Now, it's important to recognize that whenever, and this is what I normally say, when I'm giving this lecture. Bear in mind, this is what I normally say. It's important to recognize that when you work and earn your money, you need to spend some money on yourself. You do not know when your number will be called. And there are many people who have earned a lot of money and don't spend it on themselves. They don't take any vacation and go and see anywhere else. And when they die, the family members that are left behind fight over the money, but they don't get. Not to say that we need to have money save, but we need to enjoy part of the money that we work so hard to earn. Otherwise, it makes no sense. So why you work so hard if you can't enjoy part of the money? So I've gone to many places right across the world. There are some places that I go and I stay there for a night and I have to come out because I don't like the hotel. So I've been to somewhere in St. Lucia where I didn't like the hotel many years ago, and I had to go somewhere else. There are many places that I go that I enjoy the experience. So you can think about it. It could be Trinidad, it could be Tobago, it could be United Kingdom, Britain, that gave us our first COVID transmission. It could be anywhere in the USA that we're thinking of. It could be New York that we're thinking of, Times Square. Or it could be Las Vegas. And a few weeks ago, I was in Las Vegas. Now, the first time I went to Las Vegas, many, many years ago, nowadays we have our bank card that we push in, like a Midas card, the NCBS Midas card that we push in to get access to our money. Back in those days, there were no Midas cards. But that technology was available and it was being used in Las Vegas. So when I went to the hotel, I was checked in, they gave me a Midas card and I didn't know what to do because I was waiting for the key. And the bellhop took it from me and said, come, sir, I'll take you up. And I saw him just swipe the card and the door opened. This technology is prevalent now. I was in Las Vegas a few months ago, and this is my hand that you see here now. And you see a key on it? That is a band, and that is my key. I just swipe it across the door, and the door opens. I don't need any key, I don't need any swipe. So it indicates which hotel it is. And in fact, I paid with it and was able to open and close the door. It's important that you enjoy some of the money that you earn. Hopefully, in a year's time, things will be safe again and people can go and enjoy life. It's also important that we take care of each other. And countries now realize that it's important that you need to have good leaders in times of crisis. So we're going to be looking at hospitality accounting. So we're looking at the historical development of the uniform system of accounts. Now, this started around 1925 to 1926 when some accountants in New York City, and I'm so sorry for New York because they're suffering it so bad now, they developed the uniform system of accounts. So it is way back in 1925, 1926, many years before I was born and you were born, that they developed the uniform system of accounts. What we have is a standardized accounting system for various segments of the hospitality industry So we're indicating how the hospitality industry should prepare its accounts. What are the various account type they're supposed to have? So there's a uniform system of accounts for the lodging industry. Lodging in terms of rooms we're talking about. So we're talking about hotels. So the hospitality industry. Of course, we could have restaurants. That's also part of the hospitality industry. And of course, there are clubs. So there are different segments. The one we're concentrating on is for the lodging industry. That's what we're talking about, the lodging industry. So we're not doing restaurants or clubs. We're doing the lodging industry. So it provides, as I indicated, detailed information about the type of accounts that you're to have and the form that you're to have, what content you have to disclose in terms of the financial statement, what reports you're to prepare. So it tells you exactly what to do. But what are the advantages of having a uniform system of account? If everybody is using a uniform system account, it therefore means comparison is much easier. So we can compare one hospitality property with the next because we're using the same format. So it gives us a uniform classification in terms of the presentation of the results of the organization. And of course, since we say it was from 1925 to 1926, it was developed, it therefore means it has been tested over many years, and there are different versions of it. Okay? And it can be adopted for use by small properties and large properties, and therefore makes comparison between entities much easier because we're using the same format and same classification. So these are the four main advantages that uniform system account will provide us with. Now, we could have departmental statements. So there could be a department in terms of food and beverage, for example. So we can have departmental statements, or we could have a department in terms of rooms, right? So it provides us with departmental statement. So we'll have a manager in charge of rooms, a manager in charge, it could be just food, and beverage could be separate. It could be that in terms of we have a section where we have a casino, or we have a manager in charge of that. So there can be different segments within the hotel itself. So it is therefore means that for those of you who did management accounting, should have learned about responsibility accounting. So we're saying a manager is responsible for rooms, manager responsible for food and manager responsible for beverage department. It therefore means when we're evaluating the performance of that particular manager, we're using these departmental statements because it tell us about the performance compared to the budget or targets that we have set for that particular department. So it allows us to practice responsibility accounting. Now, any department that earns revenue and incur costs, it therefore means that's a profit center. So we can have revenue minus costs and expenses, and that will give us profit or loss. So these are profit centers. So rooms is a profit center, food and a profit center, beverage is a profit center because it's incurred in expenses and costs. At the same time, it's earning revenue. Or we could have a tennis court as a profit center. Now, some departments just incur costs. They just incur costs. So they're just providing service. So the HR department is not earning revenue. So it's a service center. Or we could have security department. So it's a service center that we're talking about. It's not earning profit. So we can divide it in terms of profit center and service center. So when we're preparing departmental statements, what we're talking about is having the revenue for that particular department and the cost and expense for that department. Now, in terms of the foods department, it will have revenue and expenses. It won't have any costs. But in terms of the food department, it will have revenue And it is going to have costs because we're going to have the cost of food. So we can have an opening stock of food plus purchases, less closing stock that give us the cost of food. And of course, we're going to have expenses. For the beverage department, we'll have revenue and we have cost of beverage also. So we'll have costs and we'll have expenses. Because remember, we'll have inventory of beverage, whether it be Heineken, Red Stripe, or good white rum. We can have purchases and we have closing stock. So for the food and beverage, we'll have costs and expenses, but for rooms, it will just be expenses that we're talking about. So we have profit centers and we have service centers. And of course, you know how to prepare an income statement. So if you are given the room revenue and expenses, is revenue minus expenses. And if you're given the food department, it will be the food revenue minus the cost of the food. That will give us the gross profit in terms of that. And we subtract our expenses and we get our profit for that particular department. Okay. So mines are like parachutes. They only function when open. If you have any questions, you can raise your hand. Those of you who know how to raise your hand, or you can play around it with it. But let me thank everyone for attending. When we meet again next week, we're going to look at sunshine. Now, I've already sent you sunshine question, and how I did it, the adjustments are there right on the questions. The adjustments are there right on the questions. And I sent you the solution. So I'm asking you to go over the question. But we're going to go through the question and go through each point, each additional information, and explain the adjustment. And if you go through it before, we can proceed much faster. And then if you have questions, if you have particular difficulty, then you can ask those questions.
Okay, sir.
Are we all good? Is there anyone that has any question to ask?
Sir, the files that you said you uploaded on OYO Valley, right?
Yes.
It's not everything that's in the PowerPoint that's in the file.
Say it again.
The files that are uploaded on OYO Valley,
Yes.
right? I'm saying the information that's in the files, are they the same as the PowerPoint presentation?
Yeah, it's the same information. Hold on. The information that I emailed to you?
No, sir, the one I uploaded on OYO Valley.
I've uploaded the information that I have sent to you before. Even though I sent it to you before, university required me to put it on OUR Valley. So I put it on OUR Valley. So it's the same information that was sent to you.
Okay.
But there's also additional information that I put there in terms of future lectures.
That's week 9, the Sunshine Hotel, right?
Yes, but I already sent that to you. Don't everybody receive Sunshine Hotel? Question and solution?
No,
Yes, sir.
I emailed that to you before, but it is there on OUR Valley. There's also more.
Sir, apparently I'm not getting your emails.
Huh?
I'm apparently not getting those emails.
The email was from long time, long time ago. Not now.
Okay.
That I sent. Didn't you receive Sunshine?
It's not a recent email because I had to scroll through my inbox
Yeah,
to actually find it.
Weeks and weeks ago. I sent you. What does scroll through? If it didn't,
It's the same email that has the chapter on annual reports.
Right. Yes, that same email. Everybody,
check.
everybody remember that email?
I'm not so sure that I do, but I'll check. If not, I'll ask Ashin to forward it.
Or as usual, they kind of send me an email and I send, but it was done a long time. Now, for the other information that I put on OURVLE, I can send it to you by email again if you want. For the additional information.
Yes, sir. Please do.
Okay. So I'll send it to you by email. I'll do that tomorrow. I'll send it to you by email. The additional.
Okay, sir.
But
I found the email, sir. Thanks.
yeah, that's what I'm saying. It's long time because it's long time. Now, I wanted to look at Sunshine Hotel because we've been doing that. When we do that, then I'm going to give you a question that you can work on your own. And then we come back and we mark it. When you go and mark it, we put up the solution and mark it, and you ask questions in terms of what you did wrong. That you can ask. If you didn't get it completely right, you can ask questions. Now I want to know where you're at with the annual report. Oh, by the way, remember I sent you I marked it immediately and sent you the results for the first part of the coursework. Right? Everybody received that?
Yes, sir.
No, it's important that when you're sending me, and I didn't send the results right away because I wanted information of everyone that is in the group. I need, when you send a document to me, the email address and name and ID number of every member that's in the group must be on the document. And if you're not cooperating and doing the work, I mean, we have a lot of time to do schoolwork now, a lot of time. So let us do the work because we want to get as close as possible to that 40%. And I want to see everybody pass the course. There should be no one failing the course. So I'm asking you to work together. And there are many ways of you can work together. You don't have to be physically present, as you can see. Let me ask you, do you feel as if you're in a classroom, just like in a classroom?
Fairly.
Huh?
Fairly.
Fairly, right?
Mm-hmm.
And if you want, you can turn on the camera and people can see you. So there are many different ways that you can meet each other online. You can even have WhatsApp group, you can email. So it is possible for you to meet together and share information. So we need to be working as a team. We need to be working as a team to complete it. Okay? And I wish the entire world would recognize that it's not just one country in this thing. We are in this thing. As the people in the United States, some of them going out on the road and demonstrating. What they're doing is going to pass on and make this thing prolong. If we all cooperate, this thing will go away. And I guess some people don't know anybody that died. I know somebody who died in New York. So it's important for us to cooperate and we can get our lives. It won't be the same life, but we can get back and we can start moving about. But everybody has to cooperate. And in these times, I hear people talking about PMP and GLP. There's no PMP and GLP, it's one country. They want to talk about Republicans and Democrats. We need to forget politics. Otherwise, we are going to suffer. So I want everyone to work together and complete the annual report. Okay? And you can go online and look at our annual reports and see all their information there. Okay? And in fact, I will send you one so that nobody now the excuse that they don't know what it's like. And you receive the chapter in terms of what should be in the annual report. So you need to follow the guidelines. Okay?
Sir, is it limited to what you have sent?
No, man, you can add other things. I just give the basic thing that so you know exactly what I'm marking, looking for. But you can put in other things. You can put in other things. Just look in other annual reports. Okay. Anybody want to talk? You want to say aye to others?
Sir, just
Sir,
start
before you,
refuting your notion that we have lots of time on our hands. Not everybody does.
Not everybody does.
no,
Yeah,
because we still have work.
Yeah, man, I'm saying you have work, but guess what now? At a certain point in time, there's curfew. So nobody not going out on the road. That's what I mean. Nobody not going out, supposed to be going out on the road. So they're supposed to be at home. Yeah.
we would
Well, the
normally be
curfew
home
starts
by
at
those
9 p.m. now.
curfew. Right, so we would be home from work then.
We
But
would have
remember, there
already
is
been home,
also
but
home school for children and all those things. Yeah, so that's far more work than we had before.
Okay, so you need to mind your time then. We need to mind your time. We need to help each other. And you have to set aside a time that is this for this course, for the other course that you're doing. So set a time for each course. It probably a special a night, a Monday or a Tuesday, which however you want, or it could be a particular night. You set aside 3 hours, 1 hour for this course, 1 hour for that course, but you have to plan it out because the other responsibilities. It's difficult for you to go on out and go buy KFC if you feel hungry the night. You might have to look for food for yourself. So we have to get accustomed to the new norm and plan out our things. Because I had to plan out everything that, and I doing it weeks before. So even before university said, you notice I had sent you the lecture notes before that, and I start plan out already, just in case. So you have to plan, try and plan too. I know it's difficult for everyone, but we have to just plan and help each other. Someone else has
yes, sir.
something else to say? So you need to set the times when you're going to meet and set the time what you want to accomplish. And we need to circulate the document amongst each other and we read to ensure that what we're submitting is okay and it meets the guidelines. And please remember, you have been given some figures for the prior year. You need to have the prior year figures because those figures are already correct and they're being marked. So make certain that you have prior year figures if you're doing a consolidated income statement, the consolidated balance sheet, consolidated statement of cash flow, or the consolidated statement of equity. Okay?
No adjustment is needed for any figure for the prior year?
You might need to adjust in figure in terms of the classification of it. The classification. In terms of the format, but the figures are already given to you. You might just do the classification that you have to do. So all the figures are there.
Okay.
So you're doing a balance sheet. An item might need to classify as a current liability, and the next part of it classify as a non-current liability. Or you might have an item that you need to classify as a current asset and part as a non-current asset. That's the classification. But the total figure statement will remain the same. Just as for your current statement that you're doing, you might need to do some classification also. And I hope you have already taken the pictures. If you haven't done that before, each individual should take a picture and then send to the person who is collating all of that. And you probably need to set guidelines as to when you want to complete a particular section so that you finish the report before May 4th, we said, before May 4th, so you can look it over and ensure that you have comparative figures and you tick off all that was there. The notice of the annual general meeting is there. Consider income statement, you tick off what's supposed to be there so you know it is there. And
Okay, sir.
the chairperson, please remember you're going to make a PowerPoint presentation. So you're going to present just as how I present your PowerPoint presentation. But when it comes to presentation time, I will speak more about that in terms of presentation. So probably next week I can speak about what you're going to do in presentation. And if you have a draft PowerPoint the following week, I can allow you to test it out and see before you actually present. But that is what I would have normally done. So I'm doing the same thing. And when you're going to present, you need to turn on your camera so everyone see you, that you are the person presenting. Okay? And what you should do is try and do the presentation before and let the other group members comment in terms of the presentation. Okay?
Formal dress is not required.
For who is going to present,
Mm-hmm.
person need to be properly attired. So you're going to turn on the camera.
Yeah, man, properly attired, not necessarily formal. That's what I was just verifying.
Yeah. You mean not, when you mean not formal, what do you mean?
Right,
She's
so
asking if she's requested to be dressed as a business professional then.
Yes, yes, if that's what you're asking.
So to be dressed like she's going to.
Yes, whoever is going to
Okay.
present. Not the other persons, you know, just the presenter. Just think in terms of you. You're trying to do business and you set up a meeting. You're going to be trying to be properly attired. At least the top part. If you notice some presenters, they're probably in shorts, you know, but they are on jacket and tie, same here. And it's when I went to this studio to do a presentation that I noticed that. But you need to still be properly attired.
No problem, sir.
Whoever is going to make the presentation. Okay. Any other question? We finish way before time. Any other question? Going once? Going
Sir,
twice?
I sent you a message.
You sent me a message? Let me just stop recording.